I want to provide an update in terms of what the market is currently pricing for the Bank of Canada for future rate cuts. Now, there's been a lot of volatility over the last couple of weeks, so I just want to explain what's been going on and where the market currently is at right now. So a couple of weeks ago, we got some softer US employment data, which drove market yields lower because the market started to price in more aggressive rate cuts in the US. Now, the Canadian market was dragged along for the ride, and then they started pricing more cuts in the Canadian market as well. Now, this week, sort of been the opposite story, where, for example, today on the US side, they had a bit stronger retail sales. And this week, we've had a bit of softer inflation numbers, namely PCE and CPI out of the US, which has the market sort of flip-flopping in terms of how many cuts this year and how aggressive. So as of right now in the Canadian market, for example, the next meeting will be September the 4th. As of this morning, and this changes daily, so this is just a high-level snapshot right now, the market is currently pricing more than a full cut. So it's fully priced in that the bank will likely cut at the next meeting on September the 4th. There's two subsequent meetings after that, October 23rd and December the 11th. Again, the futures market, OIS, is currently pricing cuts at each of those meetings. So as of today, the market has 3 consecutive 25 basis point cuts priced into the market. Now, that doesn't mean it's going to happen. That's just what the market participants in the capital markets who trade this overnight index swap, that's sort of what they are leaning towards or what they are anticipating. And for the remainder of the year, next year, just by mid-July, so there's 5 meetings from January till July, they're currently priced in another 75 basis points of cuts. So from today until July of next year, as of this morning, the market has priced about 150 basis points of cuts. Next Tuesday, we will get the Canadian inflation number. That will move the market for sure in terms of these probabilities. And every single time we get a data point, it'll move it again. So at the end of this month, we'll get GDP. And at the beginning of next month, will be employment. But again, the meeting is September the 4th. And as of right now, the market has fully priced in an additional cut of 25 basis points at that meeting. If you have any questions in terms of the impact on this, the impact on the housing market, please reach out to me. Happy to always discuss.